If I give you 100 cities today, what exactly have I given you? Is it paper? Is it value? Is it power? Or just trust? Most people chase money every day, but very few actually understand what money is and how it really works. That's why many people work hard, earn money, yet still struggle financially. Today's video will change how you see money forever. I'm going to explain what money really is, where money comes from, why money loses value, why the rich see money or understand the money differently, and how students like you and I can use money wisely. If you're a student like me, young adult or a beginner, this video is for you. Make sure you subscribe to this video, click on the like button, and let's begin. When people hear money, most immediately think of cash, numbers in the bank, or coins. And yes, all this represents money. But that's not what money really is. Money is not the paper, the coins, or the numbers in the bank. Money is something bigger. Money is a concept, a system, an agreement between people. Let's break it down. Money actually is a tool. We use it to buy things, pay for services, make life easier. Money is a system. It works because even everyone, me and you, agrees on its rules, like the prices, the salary, taxes, etc. Money is an agreement. We all agree that this paper or this number has value, and without this agreement, money is meaningless. Let me give you an example. Let's say, for instance, I give you a pen, give me that give me 5 cities. That 5 cities represent the value of the pen. The paper itself isn't worth much. Its value comes from trust, and trust is everything when it comes to money. Imagine this. Let's say if tomorrow everyone wakes up and suddenly agree that the city has no value, all your money in your bank account will be useless. That's why money works when three things exist. One, you trust it. Money exists because people believe it can be used to buy goods and services. Two, the government backs it. The Bank of Ghana say this is illegal money. And three, society accepts it. You and I, sellers, buyers, accept to use it. Without this, money will just be a paper or written image with no power. Think of money as a measurement tool. Just like rule measures length, money measures the value of things. For example, a loaf of bread might cost 5 cedis, a movie ticket might cost 30 cedis. The money doesn't create the value, it represents the value that society places on these things. Money also stores value. You can work today, receive money, and use it later to buy something else. Here's an analogy. Money is like a ticket at a concert. The ticket outside the concert isn't valuable, but inside the venue, it gives you access to everything. Similarly, money is only powerful because of the system, the trust, the acceptance from we the society backed by the government. Money is a tool, a promise, and a social contract all at once. So what exactly is a barter trade system? The barter trade system is simply you exchange goods or services with someone else. For example, I give you yam, you give me fish. Is it right? But here's the catch. It only works when both parties want what the other has. The barter system had a lot of problems. Some examples are double coincidence of want. What if I want fish and you don't want yams? Suddenly the trade fails and nobody gets what they want. Two is value mismatch. What if the fish is worth more than the yams? How many yams equals one fish? It gets confusing fast. And three is what reversibility problem. Some items like the fish and the vegetables can spoil tomorrow, and if your goods spoil, your trade is wasted. Because of these problems, the barter system was slow, inconvenient, and risky. Humans needed something that is better than barter. It needed something that was portable, durable, and accepted by everyone. In other words, humans needed a universal medium of exchange. That's how money was born. At first, money wasn't paper like today. People used things that had intrinsic value and were widely accepted, like the cowries, the gold, the silver, the salt. These early forms of money solved the problem of barter. It didn't need any double coincidence of wants. Value was standardized, items were portable and durable, and eventually government started printing paper money, which we use today. That's why it's why Hennessy Cedis note is worth more than 10 Cedis note. It comes down to authority and trust. The government pays the money and says, this is a legal tender. What does that mean? You must accept it if someone offers it to pay a debt. It can be used to pay bills, buy goods and services. It is backed by the government, so people trust it. In other words, its value does not come from the paper, it comes from the trust in the system. So how does money actually works in practice? Money works because of three things. One, the government prints it. Two, banks distribute it, and three, people trust it. Imagine you go to a store and it says the storekeeper accepts it because he or she knows he can use to buy something else. The power of money is a social agreement backed by authority. Here's something most people don't teach. Money is created from debt. When banks give out loans, they don't take the money from a box or a vault. Instead, they create new money digitally. Let's say, for example, when you apply for a loan, a student loan of 1,000 cedis, The banks approve it in credit accounts. That thousand cedi didn't exist before. It was created at that moment. So every time the banks give out loans, new money enters the economy. That is why loans are so powerful. More loans equal to what? More money in the economy. And more money in the economy is what? People can spend more. But if there is too much money in the economy, prices go up, and that's what we call inflation. Inflation means your 100 cedis buy less than before. When you understand how money is created, you understand why saving is not enough, investing is more important, and understanding money is more than just holding cash. So, what exactly is inflation? Inflation is the general increase in prices of goods and services over time. In simpler words, your money buys less than it did before. For example, in 2020, a loaf of bread now costs 5 cedis. In 2026, now costs about 20 cedis or even 30 cedis. Let's say even if you saved 100 cedis in 2020, that 100 cedis can't buy the same things in 2026 as it did in 2020. There are several reasons why prices go up. One, the demand is higher than the supply. Everyone wants a product, but the product isn't enough. Prices go up. For example, school fees go up because more students enroll every year. Two is cost of production. If fuel or raw materials cost more, company raise prices. For example, transport fares rise when fuel prices increases. Three is more money in circulation. When government prints more money, each unit of money worth less. This is why sometimes we have high inflation. Inflation is a normal part of an economy, but high inflation can become dangerous if it outpaces your salary or income. Inflation affects everyone, but as a student, it's very real. Money saved in a bank account loses value over time. Your 100 cedis today might not buy half of what a code in 5 to 10 years. Even if you work part time, your earnings will not keep up with price increases. An example, a bus ride that cost 3 cedis in 2018 or 2020 now costs 5 cedis in 2026. If you didn't invest or save smartly, your money loses purchasing power silently. Let's look at some example of everyday life. Kinky that cost 3 cedis in 2020 or 2020 now costs 5 cedis, some even 10 cedis. School fees, university increases fees every year to keep up with inflation. If you just save without investing, your money loses value over time, even if the number stays the same. Many students think I'll just save my money and spend it later. But what if inflation is 10% a year? Your money loses 10% of its value every year. So your 100 cedis saved is worth 90 cedis of purchasing power. In about 5 to 10 years, the money worth about 50 or 40 cedis that 100 cedis saved up today. That's why investing matters. Your money should grow faster than inflation to maintain value. Many people think saving is the key to wealth. Saving a bank account earn about 1 or 2%, even sometimes 3% per year. Inflation is 10%. So even if your money is growing, even though your money is growing slowly, your money is still decreasing in purchasing power every year because price of goods and services are going up. Let's say, for example, you save 100 cedis in a bank. In a year, you earn about 1% or 2%. That's how one cedi, 101 cedi. But let's see if a loaf of bread that costs 5 cedis now costs 20 cedis or even 10 cedis. Saving alone doesn't beat inflation, so your money is basically sleeping. Assets are things that grow in value over time, generate income. In other words, assets are things that make money work for you instead of you always working for money. Some examples are assets are like the shares, businesses, land, properties, skills. Notice something, even skills are an asset. The more valuable your skill is, the more you can earn without trading time for money. Rich people understand a great principle. Money should work for you, not sit or sleep in your wallet. They don't just save, they buy an asset that grows in value, reinvest their assets to buy in more assets. They focus on cash flow, that's money coming in regularly. For example, 100 cedis saved in a bank account in about 101 or 102 cedis in a year. But the rich buys shares without 100 cedis, it can grow to 120 cedis or 130 cedis plus pay dividends. The difference is money working for you and money sitting idle. Let's look at some examples students can relate to. One, buying shares. You can invest in a Ghana stock exchange. There are hundreds of shares or hundreds of companies like the Cow Bank, MTN Ghana, Ghana Commercial Bank, on the Ghana Stock Exchange that you can buy shares from. Some are as low as 70 pesos, 1 cedi per share. Just investing in the Ghana Stock Exchange, two, starting a side hustle. You can just start styling on campus. Anything that works for you. Three, Learning a skill, the coding, graphic design, any skill that can earn you money. Every small step counts. You don't need millions to start building an asset. It's important to understand assets versus liabilities. Asset puts money in your pocket. Liability takes money out of your pocket. A car you buy for to start with costs money to maintain monthly. That's a liability. That same car used for business, generate income, being an asset for you. Rich people focus on acquiring assets, while poor people focus on buying liabilities, thinking they are assets. The first step to learn about money is to what? Understand how money really works. Inflation, saving and investing. Learn to budget so you don't spend everything you earn. Understand asset versus liability. This is how the rich people would think. For example, if you earn let's say 5 cities or 50 cities, let's say you earn 50 cities from a side hustle, you don't spend everything. Maybe 30 cities for essentials, 10 cities to save, the other 10 to invest. Every small step help you practice money management early. The second step is controlling your spending. As a student, it's easy to spend money on snacks every day, mobile data, airtime, fashion, gadgets. But do ask yourself, do I really need this thing right now? Or can I save or invest for the future? For example, buying snack costs 10 cedis per week. A month is 40 cedis. That 40 cedis could be invested in shares or a business project. Controlling your spending doesn't mean being cheap. It means prioritizing what matters. The third step is starting small investments. You don't need millions to start. 10-20 cedis a day can grow if you do it consistently. Some examples, you can invest 10 cedis or 20 cedis either every day, every week, or every month in the IC liquidity fund, or use that same 10 cedis to buy shares weekly or monthly. You can use that money, small money to start aside also. Buy one or two things from the market in bulk, then sell it retail to the students. You can use that money to buy books or online courses, or buy airtime to watch videos on YouTube to learn a skill. The key here is consistency and learning while investing. Step 4 is what building a good financial habit. Habits like saving a fixed amount of money every week or monthly, continually learning about money and investments, avoiding unnecessary debt, and tracking your spending. Even small habits what matters over time they compound just as money does. Here is an analogy. 10 cedis saved every week, that's 520 cedis a year. That money saved could be invested and it can grow even more over time. The secret advantage students have is time. When you are young, your money has many years to grow. So starting small is better than waiting until you earn more. 10 cedis saved a week from 1885 has so many time. Money has so many years to grow and benefit from compounding. Starting late at age 25 with bigger amounts, your money has less time to benefit from compounding. Time plus more consistency is equal to financial growth. Let's start from the basis. Money is a tool. Think about hammer. Hammer can be build a house, useful. That same hammer can hurt someone dangerously if misused. Money is exactly the same. If used wisely, it builds what wealth, opportunities, and security. But if misused, it creates stress, debt, and problems. Saving and investing $100 over time helps you financially, but spending that same $100 on unnecessary things carelessly is going to no growth and regret later. The key is how you use money, not whether you have it. And the next is money is not everything. Yes, money can make life easier, open doors, build security, but money cannot buy true friendship, money cannot buy health, money cannot buy wisdom and discipline. Students can save thousands of cedis and because of lack of knowledge can lose it quickly. One student somewhere can also save money and learn money skills and habits and grow wealth over time. The lesson here is money alone doesn't make you successful. Knowledge and habits do. Here is the most important part. If you understand money, it will save you, and if you don't, you will chase it forever. Most people work hard, earn money, and never get ahead because they don't understand how money really works. Understanding money means understanding asset versus liabilities, learn about inflation, saving and investing, using money to create opportunities, not just spending. As a student, your biggest advantage is time. Start learning about money now. Start small, consistent savings or investments and start building assets. Save 10 cedis a week and learn about budgeting. Invest 50 cedis in shares or mutual fund and learn how returns works. The earlier you understand money, the less likely you are to chase it later in life. This channel is to teach you how money really works. We break complex financial topics into simple student friendly. To sum it up, money is a tool. Money is not everything, but it can save you if you understand it. Start learning, start small, start building financial habits. Comment in the comment section if you watch to the end. Share this video to a friend who needs to understand money. Like, share, and comment your thoughts, your questions, everything in the comment section. I'll be glad to reply them. If you found this video helpful, subscribe to this channel so you don't miss our future videos. Remember, financial freedom starts with knowledge, not just cash.